Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, you name it, across the world of crypto and blockchain all around the world. And today I have another amazing guest. He is the director at the Pyth Data Association. His name is Marc Tillement. Marc, welcome to the show.
Hey, thanks a lot for having me. Looking forward to our conversation today.
Me too. Thank you very much, Michelle, for being here, and I appreciate it. And I look forward to speaking with you. And I look forward to it. So let's kick things off. I had the same question to everybody, but again, amazing answers. What is your background, and is it a logical background for what you're doing now?
Oof. No, pretty much. And I think if I'm sitting here, usually I attribute it to, I don't know if it's luck, karma, a bit of, I don't know, other spices. But no, back before crypto, I was actually working in the radiology industry for 3 years in Hong Kong. Discovered crypto in 2019 and like out of luck. Changing apartment, moving into a new place. The guy that was already living there was an OG from BitMEX that pretty much crypto-pilled me from the philosophical standpoint, like removing either the banks or like disintermediated the banks, less government outreach, more financial privacy. And so 2019, 2020 was very into just reading crypto stuff. DeFi season or COVID crash, DeFi season got me like day to day plugged in on my computer. So pretty much when I was not like running around hospitals in Hong Kong to do my normie job, I was on the computer doing crypto stuff. In being very like early on, very catching up like and loving the DeFi aspect, I like one angle that most DeFi apps need is an oracle. So when the Pyth Network project kind of started early 21, I was like day one on board, despite not having any TradFi or market data background. But luckily we have other people in the team that are geniuses at it, so I can just focus on other things.
Awesome. So 2021, yeah. I got into crypto 2017, and one of the first things that I bought was Chainlink. So, but I've been following your project. I've been following the Pyth project for years, and keep building, so keep growing. So it's awesome, to see. So I want to ask you first, what's the Pyth Data Association about, including this relationship to the Pyth Network?
Yep. So Pyth Data Association is a Swiss nonprofit association, like you see many in the crypto world, Ethereum Foundation, Near, Solana, and the likes. And the core purpose of the association is to help grow the Pyth network. So Pyth network will very much refer to this universal price layer that now that we call it project. Some call it Oracle. We're kind of focusing on the pricing type of things. And so, yeah, day to day, mostly focus personally on increasing the DeFi footprint for Pyth on over 100 chains the protocol is available on. So doing lots of, let's say, BD in DeFi. And also, like the Pyth network is now governed by the Pyth DAO. The Pyth DAO is governed by Pyth token stakers. So I do also get involved a lot from the Pyth Data Association perspective, helping to, just voice what we think can be nice or what we shouldn't do, etc. So pretty, most of the time we see like actual DeFi consumer-facing protocol being very decentralized, having governance. For an Oracle network to actually be governed, whether from publishers, data users, or just the general crypto community, is quite a feat, because if you go on the forum, you can see sometimes there is very math-driven like conversation around how to determine pricing, quality, reward. But you also have, for example, right now, the Pyth community trying to establish actually the first Pyth community council within the DAO, so that anyone can just start like promoting the Pyth network wherever they see fit.
Awesome. So I want to get into the overall current state of the decentralized oracles, but I want to talk about Pyth in particular first, because Solana used to crash frequently, and Solana doesn't crash frequently anymore. So I'm attributing it to an improvement in the evolution of the Pyth network and your role in that. What was your role in that, and how have you improved it, and what's the state of Pyth first, and we'll talk about the industry second.
Yeah, so Pyth and Solana do have a very kind of old relationship in crypto years, so 4 years. So initially, yeah, so indeed, in let's say April or May 21, the first, let's call it V1 of the Pyth network was natively deployed on Solana. And by natively deployed, I mean that the Oracle itself was just a single program on the Solana blockchain that was receiving inputs from data publisher, aggregating and just exposing the aggregate price of Bitcoin sold to everyone on Solana. And this until I would say end of 22, if my memory serves me right. So for a year and a half long, all the Pyth Oracle infra was just completely living on Solana. Problem is, as you mentioned, when Solana did go down, I mean, the Oracle couldn't work because if the publishers cannot send a transaction to send their inputs and the Oracle contract cannot update this, it doesn't work. But for 21 and 22, the Pyth Oracle was solely available on Solana. So if the chain is not running, the DeFi app anyway doesn't need the price. So it was almost the contagion was pretty limited within the Solana ecosystem. But there is a world beyond Solana, and we really wanted to capture that. And so I would say end of 22, we released what we refer as PythNet or Pyth v2, which runs on its own app chain, which is a Solana fork. Pretty much forked Solana, did a few technical tweaks so that, for example, no one else can deploy a smart contract on this, let's say, Solana SVM-based blockchain. This blockchain is run by the publishers. So we have in between or close to 100 data publishers live on the network. These publishers not only send data, but they also run the validator of PythNet that enables to keep that infra up and running. So now, pretty much we've learned from the Solana kind of issues, also that we had to relying on a public blockchain, especially when it goes down, is not great. But also the second aspect was Pyth is a very high frequency oracle. So we expect publishers to send price update every 400 milliseconds, like the Solana block time. And the thing is, when you use a public blockchain, you have to actually get some gas token and spend those. And I think at some point at the peak, so if you remove the Solana consensus vote, which is 2/3 of the total Solana TPS, Pyth was doing almost 2/3 of the non-consensus activity on Solana. So the thing is, sometimes, I don't know, the whole publisher roster was spending 100 SOL per day. The thing is, it's fine when Solana is $8. It's less fine when it's 200. So also from an operational perspective and cost perspective, having your own block space helps. And after, for expansion, now the Pyth price feeds are permissionlessly available on 110 or 120, I'm not sure exactly, blockchain, because now pretty much we just have to deploy a single smart contract on that new chain that enables to verify Pyth price feeds. So from Solana early days, now pretty much leveraging Solana tech, still our biggest user on Solana, biggest activities on Solana, but now we're very multi-chain Oracle network.
That to me is the definition of growth. So awesome, so let's talk about the current state of the decentralized oracles then, and how do we ensure better data usage experience for everybody?
So decentralization at the Oracle level, I mean, you have many verticals of, let's say, decentralization in your Oracle. So usually when we refer to decentralized, will be everything that's contract upgrade. So having either a DAO, a council to do smart contract upgrades, to change fees, to release a new product, etc. Pyth, as of right now, and maybe out of the, let's say, the 5, 6 Oracle that have decent usage, I think there might be only 2 that have the actual protocol being governed by token holders. I would say API 3 and Pyth. I might forget another one, but top of mind, these are the only 2. So that's very important because like that, like the idea almost of Pyth initially, or at least how I conveyed to my parents, is like Spotify for financial data. You have data owners, data creators contributing, and data users. And overall, you need the 2 sides of this equation to have a feeling of owning the network, be like able to change it for the better. So this is the first, let's say, vertical of decentralization. After, in regards to more the data quality, so whether decentralization is the best term, maybe it's more resilience or reliability, is if you have, let's say, only a single publisher for Bitcoin USD. If the single publisher has a bug or just starts acting nefariously, your Oracle can provide a wrong price, people get liquidated, everything goes to bad. So here, I mean, most of the time, Pyth initially launched with, I would say, about 15 publishers. So back then, like overall, as long as the majority was accurate, like the Oracle's safe and the protocol downstream are safe. So 3, 4 years ago, we had, let's say, if 7 publishers out of 14, 15 were to bug or attack the network, it would have been pretty bad. Nowadays, with 110 publishers, like the surface attack is way harder. Like you have to convince 50 companies, whether they are crypto native or TradFi native companies, to, I mean, either they face a similar bug or different bug at the same time or attack the network. So around this, like it's very important to just increase the breadth of your input. Like a bit like blockchains, like Ethereum, Solana, the more nodes, like the less the likelihoods of I mean, a fork or like a double spending, etc. And finally, actually, no, finally, I touched on the 2, data quality and decision making.
I used to. You just explain something to me that we used to see these scam wicks. Like, you put your money on like maybe Binance and then the price goes up and down and then you wipe everybody out. That doesn't happen anymore, right?
It depends. You still have, I think, during the Bybit hack, and I'm losing track of time already, if it was a week or 2 weeks ago, you still have this. Not like most of the time, these scam wicks are more like big issues coming. So Bybit, like got stolen 1.5 billion. Like you had, I mean, if you're a big trader on Bybit, for like better be safe than sorry. So what do you do first? You withdraw your money, you stop trading on Bybit. Bybit, which is like still a top 3 exchange in terms of volume, like started seeing, I mean, scam wicks or asset actually trading at a pretty big discount versus other places. So you still have those scam wicks here and there. They're less, let's say, pump and dump than what like 5 years ago it was on like even Bitcoin or ETH. So it's more, it happens, let's say, once a year. How do like Pyth, let's say, or any Oracle and even protocol should think about it is like, it's very important to like not just rely on a single place. So for example, if you were like, I think Bybit, Bitcoin was trading at 20 bips discount for many, many hours. So if your Oracle was purely sourcing from Bybit, pretty much anyone could have gone on a derivatives protocol that used that discounted prices, go long, and over time, it'll just repeg to the Binance or the OKX price. So it's very important for the publishers to, at Pyth and other oracles, to like cover as many markets as possible. And whether you like filter those out completely, whether you average in it, because after pricing is, I mean, it's very financial, but it's also very philosophical. Like, what's the true price of an asset? You can go on Binance, you can go on Bybit, on Coinbase, open the Bitcoin USD price, you'll see 3 different prices. What's the right price? Like a blend of the 3, likely.
Right. So I want to find out. I don't know if you caught the news last night. It was last night, I think, where the David Sachs and Trump, President Trump, they announced the U.S. would have a strategic reserve, right? Bitcoin, Ethereum, Solana, Cardano, and XRP. Oh, I don't like. Some people will say Bitcoin's DeFi, but I don't think of it as DeFi. I think of like Aave, you know, Pyth, Chainlink, being DeFi, right? Oracle's being DeFi, but none of the Oracles made it on that list, right? So, what is the future of DeFi? What do you envision, and how do you move forward now? Being that one of the strategic reserve assets, it's not even a blockchain. What do you think?
So first, I mean, I'm not even sure myself, because sometimes you hear stockpile, sometimes you hear the reserve. Like the stockpile, it's more like I'm not selling what I've recovered, the reserve I'm buying. I mean, we'll see also the share. Because I mean, did they pick the top 5 most known brand in crypto? I don't know. DeFi, I mean, luckily enough, I think like it will come, because I mean we all heard about World Liberty Fi, pretty much a fork of Aave that's somehow run within the, I mean, Trump family or like entourage, let's say. So I'm pretty sure it will happen. When, I don't know. But more than like, it feels like for now it's just about, okay, please pump our bags. So I don't think there's very like tons of strategy, at least coming from the industry, the crypto industry. It's more like, okay, token go up, so we're happy. But over time, I think it just takes time. Like you had, sadly, sadly, it's like a recent, a young industry. 90% of project dies over time. I think it's just we'll just need some consolidation. We have already some clear winner. Aave a clear winner on Bow lending. You have others like maybe DYDX or Hyperliquid for the everything that's derivatives. So these will find their way, I guess, in the US strategic reserve. But to be fair, I'm like, we'll see how it evolves, because like, does the US government or own stocks? I actually don't know. So I found it pretty weird. For me, I would have just bought Bitcoin. But no, what's actually, I think, very interesting is like we see BlackRock having sent $500 million on chain with their Beetle fund, start getting some interest. So I think it will most likely like within the next 5 years, it will mostly be coming from institutions, like private institutions rather than the government.
Yeah, I'd agree with you. And let's talk about those private or like publicly traded stocks or public or private, whatever. It's the same category, right? It's companies, right? And most of them are in the TradFi space. Old Wall Street. We want to get everybody someday on Web3, right? What's the best way to bridge that? Because there's challenges, right? What's the best way to bridge TradFi to blockchain Web3?
For them to make more money than in their regular business. Like we can see like the US rates, like treasury bill must pay, I don't know, 4 to 5%, and it varies. You go on chain, I mean, you have way more risk within DeFi, but I would imagine that over the past 6 months, the usual stable USDC rate has been like 3x the treasury bills. So once, I mean, likely, I mean, I think you assume more risks when you go deposit in Aave rather than the US government T-bills, but still, like 15% is a lot of money. And I mean, BlackRock, I think, and others do their due diligence, audited contract. It's been here forever, 30 billion secured. So I think they're fine. like taking a bit more risk to actually generate around 15%. That's like very, very big, I would imagine, for them. Same with stablecoins. Like, why would you let Circle and Tether make gazillions amount of money while you could do it yourself and have a way bigger distribution? So I think it's coming from, I mean, there, as everyone in crypto and in TradFi, I think everyone's out there to make money. So for them, it's like an easy way, and they'll go progressively. And I would imagine if, let's say, tomorrow BlackRock wakes up with his $500 million disappeared, I mean, they'll survive pretty easily.
Yeah. Yeah, BlackRock would survive that. So, and JP Morgan would survive that, right? You know, so yeah. So how do you reduce the risk actually? You know, it's still risky, but like it's probably a little more risky than it should be. So how do we minimize the risk to attract more, you know, people coming in?
So, and actually, I linked back to the Bybit hack, because even if, I mean, pretty much they were using the standard tooling. They were like socially engineered. Their user interface, their website was altered, etc. So it's still very scary, because even when you have what you think is the like top OPSEC for your funds, you actually always one click away to lose everything. So I think institutions have kind of the capability to actually have very strong OPSEC. For the user, I think for the individual user, it's way harder. And so here I would imagine that to get that mass adoption we all talk about, it's all going to be more around the UX. Account abstraction, almost like you create a wallet, like you want almost like if you want to buy something on Amazon. Like recently I've done it for the first time in forever. Like buying on Amazon is very similar to buying like anything on crypto on the blockchain. Go on the website, you fill in your credit card details, your banking app sends you a pop-up notification. Like I do trades on chain that are faster and have a nicer UX than Amazon. The thing is, yeah, security, I can click a wrong link, lose everything. So I wouldn't be shocked if like we'll get solutions that are like very kind of normie friendly, so that like let's say I want to buy something for $100, I would top up a new account $100 and not have my whole bank account potentially at risk. And whenever I've bought my 100, this wallet gets closed. So I think we're just a few like UX improvement, UX development away to have like everyone without even knowing using blockchain in the backend.
Got it. So the way we scale that infrastructure so that everybody can use it, what's the best way to scale that infrastructure?
I think it's all about payments. And I think crypto today, most of the use cases or the most prevalent use cases is like crypto payment, money transfer, and like maybe also we're very self-centered as Europeans and North Americans. Like we have no clue how big it is in South America, Africa, and even China. I mean, China, for example, I mean, the Chinese country managed to get everyone on like paying on WeChat in over a couple years. I mean, we won't have our governments force us to use blockchain. That would be pretty weird. But I think it's just single easy use case that bring disproportionate amount of value for users. So crypto payments, like you could do what you do on Venmo, arguably, and still American, like it could just run on a permissioned or even permissionless blockchain. So payment, and same, like buying things. I think like we start Solana's, I think it's doing well with their Solana Pay. Like very focused there. And I think it's one like if my parents would use crypto if they didn't know it was a blockchain behind. So I think the payment infra Like you go pay with Solana Pay, you don't even know about it, and you manage to make it work.
Interesting you say that about Venmo. You know, last month I was hacked on PayPal. Somebody came into my PayPal account. I started noticing all this money going away, and I'm like, I changed my password 3 times during the process, and they took the money anyway. So it had to be somebody who could get through the passwords. The next day, PayPal refunded my money. Those refunds don't happen in crypto. You know, you lose your money. You're like, you don't take accountability. What is the role of accountability? You know, by this company who said that should exist in Web3. What kind of accountability needs to exist that doesn't exist now?
Yes, I think, yeah, this is still one of the reason many people still favor, whether it's PayPal, whether it's traditional banking, you have first, most of the time you have someone you can talk to. Many crypto projects, and especially the most decentralized one, like you don't have a support hotline, you don't have an email, you have to go in Discord, etc. And I wouldn't imagine like my grandparents going on Discord asking questions about their their funds missing. Um, and yeah, having the ability to revert things is in times very powerful, very nice, but sometimes it's the other way. So it's kind of two sides of the same coin. What if now your government doesn't want you to spend money? You would almost want like, oh, it would be better if no one has access or can block me from doing anything. One thing we don't see yet in crypto, and even I think in the case of Bybit, unless I've missed, but there is barely no insurance like product. After, are you able to insure 1.5 billion to Bybit or even like more because they must have 50 billion in assets total or something? Like, I wouldn't want to be the one paying my annual renewal to insure $50 billion in crypto. But I think there will, like, over time, these type of products will arrive, will be somehow useful, and whenever even there is a big like hack and payment, like the um, the insurance company doesn't go bust. Because I mean, even this, like, I mean, I'm no real estate guru, but like like home insurance in Florida is like almost impossible right now. So it's again, I guess we're still a bit early, even though crypto blockchain started 15 years ago. I think we're pretty early on the insurance part.
I think it's interesting you said that. Um, I've interviewed. I have a background. I worked at 12 years at AIG. Before that, I worked 3 years at Prudential, and in the middle of that, I worked a year at AXA. So 16 years insurance. And so far in my podcast, I've only interviewed one insurance project. You know, what like and what's preventing those insurance companies from getting into this space to cover, losses and stuff? That seems like it could be a really good business. What do you think?
And I actually pivoted back to Pyth without shame, because again, earlier I mentioned if your price oracle is ever wrong, you trigger a bunch of liquidations, wrongful liquidations, either on bull lending, on derivatives. And for now, I mean, most of the time it's still the user that just pays the price. Sometimes the protocol use its treasury funds to be like, okay, we'll try to make you whole. It barely happens ever. End of last year, like Pyth, so I mentioned the Pyth token could be used in governance. So you stake your token, and every time there are votes, you can vote yes, no on like whatever topic. The end of last year, we introduced what we call OIS, Oracle Integrity Staking, which overall kind of works as a recourse when bad things happens. So every publisher, every Pyth token holder can go stake in their tokens in this protocol, OIS, and you would choose a publisher. So pretty much you can go on the website, you have 100 publishers you can pick from, you see data quality, the feeds they publish for, etc. And the idea is that if ever the Pyth Oracle would print a wrong price, let's say Bitcoin USD 1 billion. And there are like impacted protocols, impacted users. They would actually be able to come to the Pyth DAO with the proof of, okay, this was your wrong price. You can compare it to, I mean, look at Binance, look at Coinbase, look at OKX. Bitcoin wasn't at 1 billion. You cost me X because I used that. And here, the Pyth network, the protocol would actually be able to, if it accepts the claims, determine which publisher caused this 1 billion price, this wrongful price, slash them, and use that slashed amount of Pyth token to pretty much reallocate it to the impacted publisher. So overall, a bit like exactly what we're talking about. After, the problem is the size. Like, if, let's say you slash, there is, I mean, Bitcoin's a big example. If we take a more exotic price feed and the losses are, let's say, only 100K, and in the current design, you would, let's say in Pyth style, you could slash up to, I don't know, $20 million. But you also have the other case, back to the 1 billion. If Pyth, like Bitcoin price would be 1 billion, there would be like likely billions of losses. There isn't enough Pyth staked that can be slashed to cover that 1 billion. So it's, I guess it's hard to price, and you're always, if badly done, one error away to get blown out.
Got it. That's why you have reinsurers. So it should be adopted. You know, I don't see the life insurance side yet, but maybe someday too that could happen. You know, so very cool. Very good. It makes you think. So thank you. I want to thank you very much for speaking with me today. I enjoyed our conversation. I have one last question. And it's easy. How can people find out more information about you and about the Pyth Data Association?
So best would be the pyth.network website. You can also go on pythdatassociation.com. Oh, yeah, it's not the most sexy website, the association one. Myself, Marc Tillement on Twitter, and most, like, if you're new, the best way to start, I mean, of course, website. So you see what's up, because we have now 1,500 price feeds. So whether you're like stock guru, FX guru, crypto guru, you have everything you want. If you're a developer, whether even blockchain or not, like if you just like run trading strategy on stocks, you can actually consume Pyth prices off chain for free for Apple and all the stocks you want. And if you're really community guy willing to go in the trenches, I would suggest you to join the Pyth Discord. That's where all the magic happen. Like, one of the benefits, I think, or perk of the Pyth network is being an oracle available on so many blockchains, serving so many use cases. By following Pyth, you kind of your window to the blockchain DeFi world. So you don't have to do all the chain one by one. You can just follow Pyth journey, and over time you'll discover protocols.
Sounds wonderful. Thank you very much for your time today.
Thanks a lot. Had a blast.